What's up? My name is Lam. I'm back at it again with another great video. On today's video, I am going to be talking about my stock market investment strategy. The stock market platform I use to trade is Robinhood. If you do not know what that is, I will drop the link below so that way you can check it out and maybe you can start trading stocks up there too. If you use my link, you can get, I think, 1 or 2 free stocks if you use my code when you sign up. So please feel free to do so. So basically, my stock market strategy, it started before I even got on the Robinhood trading platform. It started off with, like I said, and like I say in all my videos, it started off with getting out of debt. It started up with building my emergency fund, right? Once I got out of debt and built my emergency fund, I started getting back into trading stocks earlier in 2020. So I started trading stocks during the dip. When the crash happened, the coronavirus happened, I was like, hey, this is a perfect opportunity. I've been saving up my money, got my emergency fund. It's the perfect time to buy. So recently, I decided to invest the $500 consistently per month into a standard S&P 500 stock, and you probably heard me mention that in some of my other videos. But I decided that I'm not going to do that. Just for me to consistently invest the $500 in the S&P 500, it's not interesting enough for me, So investing is boring. It's supposed to be boring. You make your money when you invest boring. Otherwise, you get scared, you get frantic, and you lose all your money. You get overzealous. You think it's going to explode, and then it doesn't. Then it ends up dropping. The company goes bankrupt. So that is the better way to invest in stocks, to consistently put in over time. And that's what what a lot of people do in their retirement and 401ks, even if they don't know it. Their money every month is going into the stock market. So that actually is, I would say, a better way to invest from what I'm reading, all the strategies. But what I've been doing is just short term holding and then selling. So something goes down, I see a popular company pull back, I buy some stock, and then when it goes up, I sell it. That's basically what I've been doing. I look for like 3% moves. So if Amazon, Tesla, Apple, whatever, all the big name companies, when they go down 3%, when they drop 3%, I buy in. When they go up 3%, I sell them. And usually that's a good amount for me to make some money. Some I do hold continuously. I have VOO stock right now, and what I've been doing with that is I try to own around 8 shares, and when it goes down, I buy up to 12. When it goes up, I sell down to 6, and then I just keep between that 6 and 12 range. So basically, what I'm doing.
So if you see a stock market chart,
So when we see stock market charts, right? Company starts here, and then maybe it has some history down here that we don't see. Start here, company goes down, and you buy in, right? And then the person buys in, and then it go up, and then it go down, then it go up, then it go down, then it go up, then it go down, then it go up, then it go down, and it'll do that kind of thing. And if you bought in right here, and then it's right here, and then eventually you need your money and you sell it, I mean, you'll still make money. And that's the buy and hold strategy. Let's say this happens over a 5-year period, and you buy here and then you sell here. You made your money, right? And that's the idea that a lot of stock market investors tell you to do, just buy and hold it or whatever, because over time it'll go up. But what I've been doing is I've been trying to time the market, which I advise against, and what other people advise against. But to me, it's just a more fun way to invest. I want to make money. I don't want to lose my money, but I don't want it to be boring. I don't, So I always feel like I can make more money or I can beat the market. So I try to buy down here, then I try to sell up here, then I try to buy back more down here, then sell up here, and then I kind of buy and sell and try to do the dips. And I haven't done the math on it, but I think, like, let's say if you could time the bottom and then the tops and you could buy and sell perfectly, I'm pretty sure you would make more money than if you just bought down here and then just sold up there. So I never invest all of my money. So let's say I have $2,000, right? Initially, when I first invest, like when I invested earlier this year, this is what happened. I invested, let's say I have $2,000 to invest, and that's sitting in my portfolio. I invested 1,000 on the initial drop that happened around February 22nd, and I thought the drop was over. I don't remember the percentage on how much it dropped, maybe like just 10% or whatever, and it ended up going down like 30%. The S&P 500, it ended up going down like 30%. So I bought it at the initial dip, and then it just flew off the cliff. And luckily, because I hadn't invested all of my money, I could buy in at the bottom and then get some of my gains back that I actually had lost from thinking that was the bottom. So I bought back in. And really, what I like to do and what I'm doing now, because I actually have a little bit more money in the account than that. What I like to do is, if I have, let's say I have $10,000 theoretically. Let's say I have $10,000. I like to invest $3,000 in various stocks, and then I leave the other $7,000. That way, if the stocks go up, that $3,000 can turn into $7,000, 8,000, 9,000, whatever. The $3,000 can make me money, and I'll be satisfied with that, right? But just in case I invest in something and it looks like it's gonna go up, and then it falls off the cliff, now, not only do I have my $3,000 that's invested that then went down, maybe that's worth 1,000 now. Now I buy in 3 times as much as my initial investment. So that way, I put 3,000 in. Now I want to be able to put 9,000 back in down here when I think it's the actual bottom, or 3,000. Let's say I bought 3,000 up here. Now it's worth 1,000. I'm gonna buy back in, and I'm gonna buy back 6,000, right? And then if it falls some more, I want to be able to have more money, so that way I can, now it's only worth 500. Then I'm gonna buy another 6,000 worth of stock. You know what I'm saying? Because if it's a well-known and well-established company, or if it's something like the S&P 500 or the Dow, or just one of these broad indexes, it's going to go back up over time. Whether that takes a year, 2 years, 3 years, however long the market is going to take to recover. Eventually that you'll get your money back. And I think this method is called like bottom down averaging or something. So you average it out. So my numbers might have been a little off. You started off with 10 grand. Maybe you want to invest 2, and then it drops. And then you want to invest 2, and then drop some more. Then you want to invest another 2. Then you got 6. And then what I'll do is, right, when it's dropping, or when you have this correction, let's say it drops, going up, drops, going up, drops, going up. And what I'll do is, when it goes up, and then it goes up, and then it drops a little bit and goes up, I'm like, hey, we're no longer in a bear market. When the bull market starts to push, so this would be the bear market. When the bull market starts to push, I'll go ahead and then I'll throw the rest of my money in, because at that point the stocks are going up, and then normally it'll skyrocket from there, and then I'll make all my money back. So I was really hyped to make this video. I was up like 2% today, right? So I'm up like $150, and I'm up $150, and I ain't even have to leave the house. I ain't even have to leave my room. But if I'm working, I gotta work 8 hours, 10 hours to make $150. You telling me I can make $150 just from sitting in my bed? So I got hyped, and I was like, man, let me make this video. I want to tell them what I'm doing, show them what's going on. And I was up, and then I took a nap, and then they stormed the Capitol, and all my stocks, they went back down, and I didn't make no money today. But I was up 2%, And overall, for the past 365 days, I'm up 115%. So that means I doubled my money. Whatever I put in, I doubled it, more than doubled it. So I'm up the past 365 days. So that's what I'm doing now. I'm really taking my time with it, and I think the biggest key is if time. The biggest key is that I leave enough money that way. If my stocks do fall, I can buy back in when it's lower, and then I just take the time to know that they're going to recover. If it's a good company or whatever, maybe something happened in the news, something happened, in the White House. Your stocks are going to recover, and over time, I know I'm going to make money. Not unlike what happened in 2018, which I panicked, I sold, I bought a whole bunch of stocks on the margin. I over leveraged. I didn't make sure I had that little nest or whatever nest egg to make sure I could buy back in at the bottom. So that's the biggest thing. And then with Robinhood, you can trade as much as you want. They don't make you pay for trades. So I just like to have fun with it. And the way I pick my stocks is just like the best known companies. I watch other YouTubers. If I go on Facebook and it sounds like something interesting, I go and I say, hey, what kind of growth is this company having? Or I just type into Google. I say, well, what stocks to buy in March of 2021? What stocks to buy in January 2021? I just buy them. I do a little bit of research, but I don't overextend myself. I don't put too much research into it. I'm really a real estate man. I just dabble and dabble in stocks. So as long as I'm making a little bit of money, I'm good. I probably could make a little bit more money if I just sat there and let it grow, because if I don't hit the bottoms perfectly and sell it perfectly, then I'm up 115% for the past year. What if I could be up 200%? And I take that chance. It's worth it. Some money is some money, especially with these stocks. Like I said, if I'm making some money, I'm good. I'm really a real estate person. But if you like the video, please like, please subscribe, please comment below, share the video. If you got any questions, just let me know, and I do a follow up. Thanks for watching.